PitBox Social, episode 4. We're going to talk about motorsports insurance, your track day insurance, maybe time trials, maybe even wheel to wheel. We're going to get into this today with Tyler and Ryan Staub. Ryan Staub joins us from Locked In Affinity Insurance. Ryan, correct me if I'm wrong in the company name, but I'm pretty sure it's Locked In Affinity. Yeah. So Ryan, we're going to get right into this. So Ryan, give us a quick background in your motorsports and insurance background.
Yeah. So appreciate you having me on.
Of course.
I first got involved in autocross back in 2002 and pretty quickly learned about HPDE events. And after attending my first event, the bug bit pretty hard. I was that, guy that started middle of the year, did 4 or 5 events that year. Next year did 8 or 10 events, and the rest is history. So I've been participating in the sport quite a long time. I have instructed since 2005, started doing SCCA club racing in about 2007, and today I'm still instructing here and there at HPDE track day events, as well as I've got a team that participates in endurance racing with World Racing League. So right when I got started in the sport, just happens to coincide when I joined Locked In. So Locked In, not really a household name for a lot of folks, but we're the largest privately held insurance brokerage firm in the world. And shortly after, really getting involved in the sport and learning more about it, I saw opportunities to really build a motorsports practice within Locked In, which I've done. It's, our website is lockedinmotorsports.com, but it is part of Locked In Affinity that you referenced, Adam. And I can certainly, as we progress, talk more about, kind of how that's developed. But, really at the end of the day, just had to figure out a way to, tie boring insurance with something that I really enjoyed with motorsports.
That's what you find. And I think people listening to this, and especially I think Tyler can attest to this, but really when people find a way to make their passion fit into their job one way or another. And that kind of sounds like exactly what you did. Now you are the head of the motorsport division, correct? And is that correct?
Yep. Correct. Created it back in 2007, 2008.
Gotcha. Yeah. So it's when we started the driving club back in, I guess in 15, coming up on, in 18, in 18. Ryan was our first call. Because we had to get insurance. And we'll get into some of the provider side stuff in a little bit. But really, I think we want to cover, and I think when we've talked about this a lot, because the clients that Tyler coaches or that we deal with are people just walking in the paddock. They don't understand, first off, why you have insurance or even how it works. Because they think sometimes, Ryan, I'm sure you get this question all the time is, oh, my USAA covers that, or my progressive policy covers that. And you quickly find that it doesn't. There's certain language in there that they use, right, that excludes it.
Yeah. Well, and this kind of goes back. I'm going to go all the way back to really the kind of foundation of what we created. So I'd been participating in the sport again back in 2002. And I want to say, the majority of people had done their research and, talked to their insurance agent, maybe even actually looked at their insurance policy. And for the longest time, basically a street auto insurance policy would state something to the effect of, if you are participating in a timed or competition event, that coverage is excluded. So for the longest time, HPDE track day type of event, it's not timed, it's not competition, therefore you were covered. And I want to say the first kind of horror stories that I started to hear were right around the 2005, 2006 timeframe, where the State Farms, Nationwide, Progressives of the world started to get wise to the fact that, hey, we are paying claims for people that are driving their cars on racetracks, and that's not something we contemplated or intended with that exclusion language that we had. So, once a couple of them started to make those changes, the majority of them followed suit. It's funny, Adam, that you say USAA, because for the longest time, they were one of the few that hadn't changed. And I think it was like 2012, 2013 before they changed their policy, which was way behind the rest of the insurers. So what they, started to,
I brought that one up on purpose.
So eventually, once they got wise to it, there's a variety of different ways that they do it, but some of the more common ones are on a surface used for racing is an exclusion. So anytime you're on any racetrack, it doesn't really matter what you're doing, you're not covered. Some of them are incredibly broad, like at a racetrack facility, to where if you're going to, a NASCAR race and you're, parked in the facility, technically, now, would they actually exclude a claim if you had a fender bender in the parking lot at a NASCAR race? Probably not, but the way it's actually written, they could. But then some of them are incredibly confusing unless you really know and understand how insurance works. I've seen some where they say you are not covered at a not racing event, maybe a performance driving event. It kind of infers something competitive to it, but that term is in bold or it's in quotes, which means it's a defined term within the policy. And then once you go to the definition of that racing event or whatever terminology they use, they'll say in a performance driving event held on a racetrack or something along those lines, where it doesn't actually have to be competitive in nature for it to be excluded. So you need to understand that you go through the exclusion section, but then if there are defined terms, you actually have to go to the definition to figure out what they actually mean by that. So there's all kinds of different ways that they do it, but the kind of start of our motorsports practice and passion behind me creating this business really came from myself, being involved in an incident in 2005 with my first track car, an E36 M3. State Farm covered me, and then one of my friends had an incident the following year that was not covered by State Farm after this had developed, and kind of one thing led to another, and rest is history of the formation of Locked In Motorsports and the insurance solution that we've brought.
So State Farm rewrote the rules because of you, is what I hear.
Yeah, I know. I've pretty much ruined everything for all State Farm customers.
Just an early adapter. Well, that's cool. So you've seen the entire motorsports insurance industry come to fruition, right? So it was, it was non-existent in 05, and then you watched, the late adapters with USAA, and now, you're leading the biggest privately held company. So it's very cool. How many cars do you guys insure?
That's a tough one off the top of my head. It's in the thousands for sure. And it's, I'd say our average customer is probably doing, 3 events a year, but we've got those that do 10 and those that do 10 and those that do, 1 or 2 a year. But thousands and thousands every single year.
And then do the policies, this is more, do the policies range like based off participation, or the more events you do, you're going to be higher risk, I'd assume.
Yeah. So ours is pretty straightforward. The approach that we've taken is, rather than underwriting the individual driver, which it's so tough for us with the type of volume that we do to say, hey, Tyler is this type of risk, therefore he gets this type of rate, or Adam's this type of risk, therefore he gets this type of rate. So the approach that we've taken from the very beginning, and I think this largely comes from my participation in the sport over the years, is the biggest indicator of the risk of any individual participating in this is going to be dictated by whose event they're going to and kind of how that event is run, as well as what track that's held at. And I'm not going to pick on any particular tracks, but we all know there are ones that have, I guess, are less forgiving than other tracks, and therefore, risk can change as a result. Our premiums don't vary, dramatically based on which track, but they, there is some variance there. So really, at the end of the day, we're, kind of taking a combination of the event organizer that's putting on the event with the track that it's held at, combined with the value of the vehicle for the individual participating, is really what's going to drive the premium.
So that's interesting, right? I didn't know I knew you took the organizer into account, but I did not know you took the track into account. So, I don't mind naming names. So, if you'd looked at COTA, which has all these big runoffs, versus, we'll use a track we don't go to too often, Watkins, where it's a little tighter with more concrete. So you actually have a different rate structure based on same car, same driver, but the 2 different tracks and same values. Those could be a different policy or cost amount.
Yeah, they could. And, to further kind of expand on that, while I'll definitely say, I'd say Watkins Glen is a higher risk than Coda, but if you were running with a more loosely run group or one that provided significantly more track time at Coda versus a group that maybe tended to have a better safety history as well as might not provide quite as much track time, you could see those two premiums come more closely in line with each other because they're kind of offsetting each other with the track risk versus the kind of structure of the event risk.
So, not to sidebar, but I remember when we were going through, because we'll talk about the provider side later, but I remember when we were going through with Driving Club, we had to present a pretty detailed, here's how we're running the events. Here's how we're getting people from this group to this group, how we move people up.
Yeah.
So, I mean, and I'm assuming that happens inside of your, because you're probably also insuring a lot of the providers. So how a lot of these people are running them. And then that factors into how people get insured at the event.
Definitely. And whether we're providing insurance for the particular event organizer or club or not, we always go through, kind of an approval process where they've got to, tell us all the details of, a new beginner coming into their program, what sort of, classroom sessions do they go through? What's the, training that they do for their instructors? How's passing handled, so on and so forth.
Got it. So, I mean, I would assume a open passing day is rated higher than a point by passing.
Yeah. To a certain extent, a lot of that, again, I think this comes from my participation in the sport. Inherently, just looking at it on the surface, you'd say, more of a open passing structure is more dangerous. I'd argue that if you're setting the right foundation with the individuals coming up through the program and making awareness as an example, and really having that 360-degree awareness of what's around you, I'd almost argue that more of an open passing structure can work well if you've set the foundation well, because then you don't get the big trains building up. And when trains build
100%
up,
agree.
People get target fixation and get frustrated, and then stupid things happen.
100% agree. And Tyler, I'm sure you do too. Cause I mean, a lot of the stuff when you're in the car, doing testing at different places, testing, David Murray, stuff like that. I mean, I see a lot of the times I've seen less incidences at open days versus, a normal HPDE setup.
Yeah. And to speak to that, as Ryan was saying, it's it's the caliber of driver, right? So to get to a David Murray day or to get to anything that's going to have no point buys necessary at that level, everyone's going to have a competition license. Everyone's going to have years and years of experience. Everyone's going to be in probably a race car. 95% race cars. Everyone knows what they're doing for the most part. So I think it's got a lot to do with caliber of driver and just years of experience. So, that makes sense to me.
So let's walk through. So, okay, we got a lot of the background and all this stuff. So let's talk about now. Okay. So I bought my new Porsche Cayman, and I'm going to my first track day. It's worth $100,000. What does that, Ryan, what's the process for me how do I get the insurance? What does it cost me? What does it cover? And then we're going to go worst case scenario. I wad the car up. What's the claims process, and what am I getting back, or how am I made whole?
Yeah. So first, again, you've got the car, you have signed up for an event. Really, at that point, our customers just go to our website, lockedinmotorsports.com. It takes literally about 3 to 5 minutes to buy a policy. Again, the underwriting that we've done is really on the event organizer and the track, to where really all you're putting in is name, address, details of the car, value of the car. So super straightforward process. 3 minutes later, you've got your insurance policy, and you show up at the event. As far as cost, say $100,000 car, I'm going to say give or take plus or minus 95-ish%, probably about 600, 650 for that event.
And does that matter? Sorry, not to interrupt, but does that matter if it's a 1-day event or like a 1 or 3-day event? Like, how does that work with multiple day events?
Yeah, really, we don't do a per day charge. We do a per event charge. So that 600, 650 estimates, really going to be based on an event. We will, in the background have some, variance again based on event organizer, and some of that could come to typical duration of event, but some of it could have to do with the amount of track time you typically get from that event organizer. Could skew that up or down a little bit.
Got it.
The interesting aspect is there's a lot of folks that do 3-day events as an example on one end of the spectrum, where they might get X amount of track time, and there are groups out there that do 1-day events that get every bit as much track time in 1 day as you get in 3 days under a different event. So it's part of the challenge of kind of underwriting on our side of the house. So you go to the event, and unfortunately you have an incident. You put the car into a wall. Really, two things need to occur. One, you complete a claim reporting form that you download from our website, and then second, when you're involved in an incident on the street, typically police are going to be called. They're going to, do their report and probably issue a ticket to someone. From an insurance perspective, part of the reason that that's valuable and helpful is it's confirmation of the details of that incident on the street. And similarly, we want something along those lines as well. The insurer that we work with, where they're going to want some sort of confirmation from the event organizer. And that can be very, very simple that, hey, Adam drove his car off track at turn 4 and hit the wall on Saturday at this time. The more detail that we get, the better, because there's been a little bit done with this data over time, but we like the idea of doing more and more, where the more that we can learn about our clients' claims, the more that we can talk to tracks of, hey, what if this wall was moved back further? Why don't you have tire barrier here? That could, reduce severity of a lot of these incidents and the damage to the vehicles. But the more data that we can get on that side, the better on what we can do just overall for safety and benefit of the community. But at that point, once they turn in that claim information, I should specify and just rewind for a moment that we manage the insurance program on behalf of an insurance company that really trusts our expertise in this space. Then they end up handling the claims activity themselves. So We're still there. We're not actually directly involved with the claim, but anytime individuals have issues, which is not often, but we're always there and happy to intervene. We are, the broker responsible for our customers, and if any help is ever needed, we're always there to help.
It's like calling your agent. Like, it'd be like calling your agent for your street policy or your homeowners. Like, hey, and they're there to basically help you guide. You're there to help guide through the process, dealing with whoever the underinsurer is what it sounds like.
Yeah, absolutely. And, sometimes that's frankly on our end, cracking the whip of, hey, John's been waiting for an answer and he needs it. Or sometimes it's,
you're an advocate.
Here's really what they need. So here's how you position it through the claims process.
Gotcha.
So we're definitely there to help on that side. From the very foundation of creating this insurance program, I very much recognize that enthusiasts have particular shops that they want to work with. So we're not going to, say you've got to, oftentimes if you have a claim with like a State Farm, you've got to take it to this or this company. We let you take it to the body shop of your choice. They'll do their initial review of the damage to the car, and then they'll have an adjuster come out that will end up reviewing what the body shop put together. And it's kind of the combination of what the two of them found that's going to dictate of, what do we think it's going to take to get this car fixed, or is this car potentially a total loss? And, that total loss does not always mean that the cost to repair is greater than the value of the car. It's also considering the salvage value of the car. So, the salvage value of what a company would pay for the, remainder of what's
the pieces
left of the car. Yeah, exactly. So, I'd say typical for a total loss is oftentimes they're settled in about 2 weeks. if it's a vehicle that needs to be repaired, typically you're starting that process of the repair process within about 2 or 3 weeks. There are times that it's quicker than that. There are times that it is not as fast as that, but I'd say those are kind of averages. In the case of a total loss, it is as simple as the agreed value that you specified when you bought the policy minus the deductible. One thing we're kind of talking about the scenario of that newer Cayman purchase that probably didn't have a lot of modifications. We do an agreed value policy, which basically means you are specifying the value of the vehicle. But let's say that you've got an older Cayman that you put $30,000 in modifications to. Maybe the base car was worth $40,000 and you put $30,000 into it. In the case of that type of claim, you're going to essentially agree to what the base value of the vehicle was, but then you'll need to provide some documentation on why you increase that value by $30,000 for the modifications, and that's just simple receipts and documentation on that. We've yet to really have an issue with anyone on that side. I will say that unfortunate reality is these types of processes have had to be put in place due to never fails. There's always some bad guys
Someone
out there
ruins
trying
it
to game the system, and then it makes it more difficult for everyone else. And I'll kind of leave it at that.
Yeah, I remember, and this is more on like my homeowner's policy. Like my agent said, listen, get your phone out once a year, walk the house and film it.
Mm-hmm.
You don't have to write everything down, but just literally just having it that you've walked through the house and your closet, if you have artwork, whatever, at least they can see it. And then you can say, well, then it's much easier to determine retail value. Okay, well, we know he has 20 polo shirts. Okay, they're $30 a piece, whatever. So, I do that with the car. Once a year, I just take photos of it and say, here's everything there. I have the receipts, but it's much easier for me to ship over photos than me to go dig out receipts from 6 years ago of why I bought the suspension I bought or whatever.
Yeah, absolutely.
So documentation sounds to be very important. If you are going to modify the car, keep some receipts, documents.
Absolutely.
And I'm looking at the application or the application for the coverage looks. It's like you said, it's super basic and it's easy to do. And compared to like regular auto insurance, is there ever an incident like where, presumably the driver at fault, like where there would be coverage denied, I guess?
Yeah, great point, and something I totally glossed over. So as far as coverage and kind of where you're covered and not covered, because there are some policies that say you're not covered at a racetrack facility. You could be at, in the paddock at Road Atlanta and a hailstorm comes through and your street auto policy actually wouldn't provide any coverage. They could deny coverage. Would they? Who knows? So our coverage begins the moment you enter the racetrack facility grounds between the start date and the end date of the policy that you purchased. And really, it's going to cover virtually anything that occurs during that period, whether it's in the paddock or if it's on the track, and it is regardless of fault. Because our stance has always been that, hey, everyone signing waivers, the expectation of all participants out there is, hey, you know what? If I'm hurt or if any of my property is damaged, that's 100% on me. Is really what the waiver is saying that you're signing. So whether the incident that you're involved in on track is purely you running out of talent and hitting a wall as a result, or someone else running out of talent and potentially hitting you, we don't see a lot of that in HPDE or track day events, but either situation you are covered under your policy, but your policy is not going to extend any coverage to them. So it is first party coverage for yourself for damage to your vehicle. The only exclusion that really I've seen ever apply, and I've only seen it happen a couple of times, any insurance policy for any vehicle is going to have something called mechanical breakdown exclusion, which is essentially the insurer's protection to say that, hey, when you wear out your pads and rotors, you're not going to come knocking on their door, or if you don't have oil, you did that engine oil swap and forgot to put new oil in the car. Well, insurance isn't going to cover you when you blow up your engine. So similarly, this type of policy has that type of exclusion. I'll say that anytime you're involved in an incident, let's say you had a suspension failure, it's going to be pretty tough to say, oh, yep, your right rear suspension failed, and that's why you had a spin and then hit the wall. So, in reality, that mechanical breakdown exclusion in that scenario that I'm talking about would say that the right rear suspension failure would not be covered, but the resulting damage would be covered. And
that was my next question.
Yeah, and we've had well over 1,000 claims over the years, and I've yet to experience any situation where the mechanical breakdown exclusion has applied to. The only situation I can ever think of actually is one gentleman had a transmission failure that led to a spin that then, ended up with a contact with a wall, and the cost to replace the transmission was not covered under that particular incident.
That was kind of my next scenario question was, okay, my motor blew.
Yeah.
And I, lost all control, hit the wall. So all the damage after that is covered, but the motor would not be covered.
Correct. And yeah, that is one that
it seems dicey to me because so here's my thought process. Sorry, not to interrupt you, but okay, engine blows, hit the wall. I hit so hard, the transmission cracks. What happens to does then the transmission get covered though?
Yep. Transmission is covered in that situation.
So you basically have to work backwards to find, and with the mechanical issue, you have to almost work backwards to figure out where do you start the claim and where does it end.
Yeah, and again, well over 1,000 claims over the years, and I
probably rare
one situation that it's ever been used, and I guarantee there have been multiple situations where there was a mechanical breakdown prior to the incident occurring, but.
Make sure you hit that right rear if the right rear went out.
Yeah. Well, everyone likes to point the fingers at evil insurance companies, and there are bad things that insurance companies do. Everything is very much set up in favor of the insurance consumer to where it's, there's got to be a overwhelming amount of evidence that says this occurred before the impact with the wall, and therefore that's not covered.
Got it.
There have been well more, I'm sure many situations where mechanical breakdowns have been covered just because it's almost impossible to prove that this failed before the incident as opposed to was a result of the incident.
Gotcha. So my other question, my other scenario that I wanted to throw out there is because I think this is what I worry about more than me doing something, someone else hitting me.
Yeah.
And also, people need to understand the liability, your normal liability policy that you would maybe hold as a GL policy that you would have just because, you have value and all that kind of stuff. That is not always covered once you hit the racetrack. And that I know some companies sell a motorsport liability policy to do that. So can you walk us through a scenario? One, I'm insured and I hit somebody. Is there any coverage for them?
No coverage for them under your policy, and I'd say, part of the reason we haven't gone down the offering a specific liability policy is there's just so much history within motorsports that says that, hey, you're participating at your own risk. We're all signing these waivers. People like to say that waivers are worthless, but they've actually been pretty effective within motorsport. Yeah. And so in the situation you're describing, if you have one of our policies, your damage to your vehicle from that impact is covered by your policy. The other individuals on their own, their potential of coming back and suing you for damages to their car or injury to themselves, I'd say is very, very low.
I think you'd have to prove gross negligence. You have to basically get around the waiver. You'd have to prove gross negligence. You'd have to prove either purposeful, damage.
Yep. There's some intent behind it or something along those lines.
Got it. Okay.
And they're as they potentially connect with an attorney, that attorney is going to say, hey, we're probably better off going after the event organizer of the event than going after Adam. So that's why and that'll segue in. I know we'll get there
Well,
eventually, but
we're getting that way.
yeah. But that's where, really, I think almost any liability type of aspect connected with participation in these events, it's almost always going to go back to the track or the event organizer.
And then, of course, the other way around, uninsured motorist hits insured motorist, all my damage would be covered. And, basically, yeah, gotcha. Does your, go ahead.
Definitely some peace of mind there. A little bit off topic, but I've always wondered, a lot of, you see this more in racing, but like being in WRL, I'm sure you've heard of these teams that self-insure.
Mm-hmm.
How does that work for someone that may not know?
Yeah. So different teams operate in different ways. Some will purely do it on a rental agreement that states you broke it, you fix it. You're kind of responsible for the damages, all the way to that type of contract. But then I've known of teams that require a $50,000 or $100,000 deposit to where you're essentially putting up the dollars for a significant portion or all of the value of the vehicle, and that's held until you finish the race. And then there's quite a few that operate somewhere in between, where they're expecting a meaningful deposit, maybe $10,000 or $15,000 or $20,000, and then you get your funds returned at the end of an event. That is one that's near and dear to my heart, having participated in endurance racing events with WRL and American Endurance Racing as well. I'd love to come up with something. I keep feeling like I'm getting close to coming up with a solution on that side. I do think the risk compared to some other aspects of racing is one that hopefully we could get an insurer behind, largely just due to the fact that the mentality and mindset when you're participating in an 8-hour race is survival, right? So
Longevity.
some of the risks that you're willing to take are I think most folks try to mitigate that risk because they recognize, hey, we've got to finish to actually stand a chance of doing well in this race.
For sure, that would be, and I've priced that out with other companies, and it was hard to make sense of. So, I mean, that would be, I feel like it's close, but hopefully in a somewhat economical way, or in a way that it does make sense, where it's not, the cost to insure was almost the cost of the vehicle. It's like, well, might as well just self-insure. So
yeah, I feel the exact same way, Tyler. The majority of the solutions that I've seen that are willing to go into other areas tend to be more geared toward IMSA or SRO or something along those lines. And just honestly, the rates that I've seen, I just don't think make sense. I think it tends to make sense to self-insure, to where if we were to come up with an endurance racing program or some other program, it's got to be at a price point that actually makes financial sense.
So what about, because like we said, some of these street policies don't cover once you've touched a racetrack, and then your policy is on the racetrack or in the grounds for the vehicle. What about your spares, your tools, your trailer? Is any of that covered, or is that an additional? How does that work? The community. I've heard of one instance, and I've been doing this for 15 years, of something getting stolen in the paddock. But you never know, because these are usually open to the public. People come in and they might lose a torque wrench. Is any of that covered? If someone stole my whole trailer?
Yeah. So, I'll differentiate this between a street-driven, street-licensed vehicle and one that's, dedicated for track use. So, a street-driven vehicle that you might tow to an event, you're still going to have your auto insurance on the streets, and while you're towing, so on and so forth. Really, it should be providing coverage, while you're towing to and from events. And likely in that scenario, maybe you've got your insurance agent that's doing the auto insurance, providing some trailer insurance as well. What we run into a lot more often, though, is the person that's got a dedicated track vehicle, not licensed for street use, or they've got a race car that they either participate in races or do track days with. And we sell something that we call an off-track policy. Some people call them storage, transit, and paddock policies, but they're really intended for the racer or the person with a dedicated track car that, needs to insure the car, trailer, tools and equipment, parts and spares, all that type of stuff. And it is about the cheapest form of any type of auto insurance that you can get. The rates are incredibly low because, it's really just providing physical damage coverage for your vehicle, trailer, tools and equipment, parts and spares. Does not cover the car while it's participating in the event. It's just in storage, in transit, at the paddock. I'd say 100% agree with you. I don't think we've ever had a paddock claim for theft. We've had some wind damage claims where someone's got an easy up tent that's not secured well, and it's flying across the paddock and hit someone's car, or something along those lines. I think the biggest risk is, the car or the trailer while they're in storage, or I'm sure you guys have done this several times where you're going to an event where it's a multi-day tow and you spend stupid amounts of money on your car and the events that you go to, but then you are needing to stop somewhere at midnight and you're going to a questionable hotel with questionable area, and you're parking your trailer there overnight, and potentially it's broken in there. We have seen claims from that type of situation. So I'd say that kind of transit risk as well as storage risk is the biggest one where people really need to think about having their vehicles covered. And it is, I'd almost say, more shocking to me the number of people that don't have a race car or dedicated track car insured at all than the number of people that think that their street insurance covers them on track participating in a track day event. It is unbelievable how many people I know of that have, $60,000, $80,000, $100,000, race cars that they've got no insurance coverage on. And it is about the cheapest form of auto insurance that you can get. It's very, very affordable.
Well, that's why we're asking the questions, because we've had, me and Tyler have we've been asked these questions probably 100 times. And I tell people, I said, listen, at the end of the day, it's whatever you're comfortable risking. If you're cool to write off a $200,000 car or $100,000 car and you can walk away from it, good for you. But I don't want to do that. I'll pay the insurance, and you hope to never have to use it, but I'd rather have the peace of mind. And again, I'm not always worried about me. I'm worried about the other guy that has an issue and hits me. I can control myself. If I mess up, it's on me, but I can't control, Billy Bob in the Pontiac, coming across the track and wiping me out because he didn't do his brakes right.
Yeah.
That's that. But again, that comes down to the event organizer. So I want to segue in to the event side, and we're going to touch on this just very briefly, but there's a lot of HPDE organizations popping up. And a few race organizations, but really on the HPDE side, I honestly, people think, oh man, they're charging $500 to come out for a day. And, the track only costs X amount, they're just making hand over fist. And first off, guys, as of running one of these for multiple years, it is not that easy. And it is stressful. And anytime the track is quiet, you start thinking things and you hear tires screeching and you're waiting for the radio call, and it's not all that easy. But in order to get on some of these tracks, some of the tracks, it's a $5 million, participant accident thing. What is that? The participant accident, what is that covering? What do you need to run an event? What are most of the tracks requiring that an event organizer has to operate?
Yeah. So in the States, I'd say there are 2 tracks that don't require $5 million in liability coverage. So virtually all tracks across the country are going to require $5 million of liability coverage. And then they'll require something referred to as participant accident coverage as well, in addition to that. So, really the $5 million is kind of rewinding to a comment that you made of, a claim that the event organizer might have where there's a case of negligence and, someone involved in some sort of incident or that suffered some sort of loss comes back saying that you weren't operating the event in the right way. And I would not say that there have been a high frequency of claims in event organizer type of insurance, but it tends to be a situation where when there are claims, they tend to be larger. They just involved significant injury or fatality or something along those lines. And I'd say, the tracks have very much, identified that and seen that there's, potential for larger claims. And that's why they dictate within their rental agreements that anyone coming in renting their track carries that level of insurance. Because at the end of the day, they recognize as the track that, hey, if your insurance as the event organizer isn't sufficient, whose door are they going to come knocking on next? They're going to come knocking on our door, the track. So we want to protect ourselves.
It's interesting. I forget who I was talking to, but talking to someone recently, they're like, oh, well, it's the track's event. I said, no. I said, a lot of the ways these are written is that the track is being rented. And once it's rented, it is no longer theirs. It is the organizer's facility, basically, for the day or for the event. They separate themselves so much from the event as much as they can, where it is the event organizer running it. You were speaking about gross negligence, and I can take this out if we can't talk about it, but there was a recent video going around Facebook from a motorcycle event where an ambulance crossed a hot track because the event organizer told them to go. And then, I believe one guy had to lay down the bike and one guy hit the ambulance. No fatalities. But that, that's where this comes in. That is a gross negligent thing. No waivers protecting them from what happened there. Now, again, was it the call of the organizer or was it the call of the ambulance vendor? That's in the weeds for the lawyers and the insurance company. But, stuff happens, that's what, it's why you have these big policies. Cause I had a guy, he's like, oh, I wanted to rent the track, but they wanted all these crazy. I said, because they don't want you to do something and they get sued. These are big companies, not many individuals own racetracks.
Yeah.
A lot of the ones in the US are owned by very, Fortune 500 or Fortune 50 companies.
Yeah,
they're owned by big people, and they don't want to get sued. So
the agreements the rental agreements between the track and the event organizer have gotten, I'd say, quite a bit more strong in favor of the track over recent years than they have been in the past. Where essentially they are, for the rental fee, handing everything over to you. And the onus on the event organizer is not only just operating the event safely, but they're even going so far as to say, it is your responsibility as the event organizer to review the track before you run out there. That, you've got to, be the inspector and make sure that everything is up to your standards from a safety perspective. And, the reason that they're doing it is, in the case of that incident, and then someone saying, well, that, wall was positioned in an unsafe way, or those tires weren't stacked in the right way, or whatever they might suggest, but then the track can say, whoa, no, you event organizer, you read this and signed this contract, and you said, hey, we're accepting this facility as it is, and you're responsible for reviewing it. So, that's the reason for the high requirement for the level of insurance, specifically with regard to the participant accident insurance. That's something that's in place with a lot of other industries in the broad sports arena, where they've got individuals that are accepting risk where there's potential for injury, and the liability policy really isn't intended to respond to a participant getting injured because they're accepting that risk, they're signing the waiver, so on and so forth, to where the participant accident insurance is really something that's on the side to be a benefit to participants, to hopefully take away the situation of that smaller claim where someone has $10,000 or $15,000 in injuries and or in medical needs, and keep them from trying to make a liability claim, a big lawsuit, to where, in some groups will carry a modest amount, $15,000 or $20,000. Others will go a little bit higher than that, maybe up to $50,000. And then some organizations, the SCCAs and NASAs of the world, relied so heavily on volunteers, I think is what's largely driven them to this, that they've upped their participant accident up to like $1 million to take, kind of take away some of that risk of potential liability claims.
And if I remember correctly, I mean, relative to the cost of running a track event, the insurance is not all that much per day. I mean, it's not cheap. But like at the end of the day, it was not a huge factor in either running the day or not running the day.
Yeah, I'd say you've always been involved in a higher number of events to where economies of scale kind of work in your favor.
Yeah,
I will say the industry, while you've seen more smaller groups popping up over the last handful of years, maybe even 10 years, I think that's insurance is actually going to play a role in less of that occurring. Kind of twofold. One reason is the insurers that operate in this space, I think, have found that they've had a higher claims activity with smaller groups and with some smaller groups. And as a result, they've put minimum premiums in place that basically kind of create a barrier to entry of, hey, if you do one or two events, you really can't afford the insurance. And then there was a large provider for a number of years that had something called a risk purchasing group, kind of a aggregated type of solution.
Like a big pool.
Exactly. And they had higher rates than most would be able to get on their own, but it was the way for the small guy to avoid the minimum premiums that would normally be restrictive for them. And my understanding is that's gone away to where that solution for the one or two events a year type of organizer has really gone away to where I think we're headed down a path where it's going to be really difficult for the small event organizer to survive. And in some ways, I think that's good for the industry with some of the bad actors out there. In some ways, I think it's can be kind of a bad thing that there are some of those smaller groups that do a really, really, really good job. So.
That's interesting. That could definitely be a deterrent, obviously. Off topic, but so if I was moving, so I've got an event with some clients coming up, and they need help getting their cars from here to the other side of the country. We're going to Road America. Do you guys offer something that like I could do for just, if I'm putting together the logistics for these guys, do you guys offer something where I could cover, like, insure all of the cars just for transportation?
We don't, we have some, not on a one-off basis. So we do insure some race and prep shops that, basically they've got like a blanket coverage, which means it can cover, virtually any kind of property that they're hauling. And it's kind of a majority of the situations like that we end up covering are really the individuals having their own policies. In a lot of ways, I kind of caution you against trying to get your own coverage from that and just having a stronger agreement with your customers and kind of making sure that they've got their vehicles properly covered, even while they're being transported by you.
Tell the chuckleheads to get some insurance, Tyler.
Just
get it.
Being the insurance guy,
have him call Ryan. Just have him call Ryan and get the insurance taken care of.
I assume they probably already have policies, I would think, but we'll find out.
I believe those guys have on-track policies. I think that if I'm referring to if I think of the same people, because they're tracking a lot, but they might not have a transport policy or a paddock. What do y'all call it? A paddock? It's
we call
off track. Off track. Yeah. So I want to ask one more question. Okay, I totaled a car and I buy another car. Am I insurable?
Yeah. So our stance has been, and there have been exceptions made, not often, but if you have more than one claim in a 3-year period, then we do not offer insurance to you. So you have to have 2 claims in a 3-year period.
So 2 and you're, 2 and you're out.
Yep. And
at fault or not.
Yeah. Regardless
of fault.
Yep. I will say, I think we've only had a handful of customers ever since 2008 that kind of restriction is applied to, and I can think of a couple situations where we've been able to make exceptions for individuals that kind of had unusual circumstances. At the end of the day, that is put in place, really to try to stay away from risk that's not good for the insurance company. But there are situations where, someone's involved in an incident that really has very little to do with the risk that they present as a driver. And in those types of situations, we can make exceptions.
Does video in the car help in that situation?
Yeah, most definitely. Definitely can play a role in that, as well as, potentially instructor feedback that's worked with that driver, and or event organizer feedback that's familiar with that driver. So, it's written as a kind of set in stone. It appears to be more of a set in stone restriction, but at the end of the day,
there's some flexibility in there. Yeah, you're looking at the individual at the end of the day for something like that. But does your on-street driving record have any effect?
I've always taken the stance, and our program therefore has taken the stance, that your driving record on the street has no bearing on anything that we do with you. And my kind of thought and feeling with that is that it's such a different environment. It's a very controlled environment when run by the right event organizers that set a culture for their drivers. That it's just apples and oranges. And if you've got a bad driving record on the street, does not mean that you're a bad risk on the track. And I can tell you, I've seen more examples of individuals that do stupid things on the track or on the street that are the most conservative drivers I've ever seen on the track. It's bizarre to me, but I've definitely seen more than a handful of those.
I think there's an argument that track driving makes you a better street driver.
For sure.
And I wish companies would, maybe even see that. I know you can do all these defensive driving courses, especially when you're a teen. You do all these, you do Taggart's, the driving schools, or defensive driving, or yada yada yada, and then you get that discount. I think they should do that for the street driving. Like, hey, if you have a clean HPDE record, hey, I think give us a % off. Whatever. You want just 1%, because rates are getting crazy on the street. Well, I know Ryan, you got a hard stop coming up here. I think this was extremely informative. I think it's going to clear up a lot of people's questions. That what I got out of this is, I think that if you're going to be in the sport, unfortunately, there is some pay to play, and I think this is one that you have to pay for. I think it's just it covers you if something really bad happens. And you don't want to have to worry about, you want to make sure you get your car back up and running. Tyler, kind of what'd you get out of this? Do you have any other last minute questions for Ryan?
I've got one more if I can ask off air, but now the big thing here is, peace of mind goes a long way.
Yeah.
If it's affordable to insure the car, then why wouldn't you? Because it is the what if, or you get taken out by Billy Bob, had a DE, like that sucks. So
Billy Bob. Poor Billy Bob.
Yeah.
Well,
he'll learn one day.
He'll learn. Well, with that, Ryan, we thank you so much. LockedInMotorsports.com. We'll link you in with your Instagram and all that good stuff when we post everything up, hopefully on Friday. So if you're listening to this, happy Friday. Make sure to check out LockedInMotorsports.com. If you need anything, I think Ryan would I think he'll answer any questions you got. I've never had a problem getting in touch with Ryan. With that, y'all, stay safe. We'll see you trackside next time on PitBox Social. Thanks, guys.
Peace.
Thank you.